for explaining this very complicated matter. And to me, the main conclusion is that to tackle that, we need very knowledgeable advisors. And that is exactly what we have today on the panel. And we also have a company representative who has actually completed dual listing. So, but let me start with Petras. Obviously, it's a difficult thing to do for companies. So, in your experience, what is company size that is suitable for dual listing? And can you share your experience, please?
Sure. In general, I would say for any capital markets transactions, bigger is better. And institutional investors really like, kind of the biggest companies they can get their hands on because, like an institutional asset manager like BlackRock manages, trillions. So they need to deploy, a lot of money. And basically, all things equal, a large company with a large IPO would get a lot more interest than a small company. But as far as a minimum size, I would probably say a good rule of thumb would be around 1 billion in market capitalization and maybe like 250 or 300 million in an IPO size is probably a good time to start thinking about an international listing. An exception could be perhaps tech company IPOs, in the US. If those are fast-growing companies, I think they could probably go, slightly below these numbers. And there have been precedents of, non-US companies listing in the US that were maybe like, $600–700 million in market cap and like 200 million IPO size, which would be too small for like an exchange like London or Amsterdam because they would be considered as quite small and illiquid there.
Thank you. So one of the considerations is obviously large amount of capital that company wants to attract. And what other advantages?
No, I mean, I would say that obviously a dual listing, gives you access to different investor bases. So, you could attract international institutional investors through an international listing and, domestic institutional and retail investors through a local listing. And that's something I think that was discussed a lot, today. So those are probably the advantages. I think the disadvantages are that liquidity ends up being split and typically migrates to the home market, which we also saw in the Ignitis case. And probably the second disadvantage is like cost and complexity involved, both at the time of an IPO as well as on an ongoing basis. That's why I would say what we see generally in other markets outside of the Baltics is more of a trend towards single listings. If you can make one listing, but that works well, which kind of attracts international institutional investors, then that's a great solution. Then you don't even need a second listing. And an example could be a large IPO that happened this summer of actually a Romanian company called Hydroelectrica. It was a 2 billion IPO. The market cap of the company was roughly 10 billion. It was just a local listing in Romania, but they managed to attract quite a few institutional international investors, and it was a success. I mean, it has done very well. So obviously the question is, when that's going to be, feasible in the Baltics, and hopefully, in the not too distant future, we will have, strong local institutional investors as well as, a culture of domestic retail investors and an access by international institutional investors in the Baltics. That would be great. We're probably not there yet, but that's something to aspire to.
Thank you, Petras. It is technically complicated, and there really have to be good reasons to do a dual listing. But Armine, what are the regulatory considerations in case of dual listing?
Yeah, thank you, Daiga. And before I start speaking about the regulatory aspects, you started about gender balance. I have to say that our whole conference today, I guess, is a good representation that we're doing well in the Baltics in that respect. I think this is also a good sign of healthy capital markets. So going back to the regulatory considerations, I think I want to repeat the very complicated scheme which Indars already showed to us about different types of dual listings which we can achieve. So of course, one of them, like the pure dual listing, we're speaking about different legal entities in different countries which are actually realizing the listing by the same business, but it would be different legal persons doing the work in different stock exchanges. Then, of course, we are speaking about depository receipts, which is a slightly easier approach, and then we can also speak about cross listings and secondary listings. So regulatory requirements and the extent of complexity will differ a lot depending on what is the approach taken. And of course, one thing I can say by default is that yes, regulatory pressure will be much stronger if we choose alternative markets, alternative countries where to list, in addition to the home market. And if we start speaking about different dimensions of those regulatory challenges, I will start with my favorite topic, which is, of course, governance aspects. So we are speaking about different requirements in terms of board composition, different committees. We're definitely speaking about various requirements to the internal audit process in the company, various additional disclosures, corporate governance disclosures, ESG disclosures nowadays. We are speaking also about the whole listing process. So from the listings perspective, what are the requirements for the due diligence? What is the support of the investment bank which is necessary? The topic of audit, let me just give you an example. Of course, if we look into the extreme, which would be the US market, for instance, any issuer would be needed 2-3 years of financial data, which I think is a normal classical demand. But then the question is, you do this audit in accordance with PCAOB standards, which are much, much, much stricter than the standards, for instance, as we see them in Europe. We can also speak about the regulator as such. So again, we have very significant involvement from the perspective of, let's say, in a regulator in the US, Securities and Exchange Commission, and maybe on another side of the spectrum, slightly less scrutiny if we speak about some European markets. What else? Tax, legal, all of that aspects have to be considered from the perspective of legal structure. So what are the legal requirements for company establishment in different countries? What are the tax structuring to avoid different taxation risks? There was already mentioned of the withholding tax aspects. So all of those would form into quite a significant challenge. So if we are speaking about dual listings, as colleagues already said, it's about cost-benefit analysis for the whole process.
Yeah, and speaking about the benefit. So what about valuations? What is your experience about that? Can companies get better valuation domestically or in foreign markets?
Yes, of course, in KPMG we have quite a lot of experience with valuation process, and if we speak about listings, I think we need to separate the effects of institutional investors and the retail investors. And if we look from the academic perspective, there is a lot of studies, lots of regression analysis run on historical data to say that valuations which are impacted on one hand by local institutional investor bias and then by significant retail demand from some other market can improve the valuations of the companies doing the listing. Unfortunately, I don't have too much empirical evidence if we speak about the Baltic market, but what I can say is that if we speak about retail parts, certainly certain industries and the companies need to be in attractive industries. I'm speaking about technology, artificial intelligence, nowadays energy, of course, ESG. So if the industry is attractive, if the brand is recognized, I think there can be a lot of benefit from significant retail investor attention, especially before the roadshow happened. And actually, we have heard also the views of international institutional investors. The limiting factor could be the percentage of actually shares which would be offered to retail investors going forward. And another aspect here, which I would mention, is let's not overlook employees. I think employees as shareholders and strong share-based programs within the company can actually help a lot in relation to the share prices. If we speak about institutional investors, I think there are certain companies which want to be bought by everyone, by top investors, being it local markets or foreign markets. But if I take example, let's say, of Port of Tallinn, if we look at the statistics, so the top investors made up, if I'm not mistaken, around 60% of the whole offering. Then if we look at 25%, then it was already about 70% of the whole offering. And then Estonian investors made up more than 40% of the whole transaction. So if we do simple math, I think we have clear evidence that yes, local institution investor bias is present and can positively impact the valuations too.
Thank you. And there is a saying that we can talk about and discuss things, but it's always worthwhile trying at least once. And today we have a great Ignitis group representative. Ignitis is the largest company currently listed on Baltic exchanges and also had a successful dual listing case. So Jonas, can you share your experience? And Jonas has also prepared us 2 slides. Yeah, so can we have slides on screen?
Yeah, sure. So we can jump straight to the next slide. So for the context, just so Ignitis, at Ignitis we did the largest ever Baltic IPO, which also happened to be one of the 10 largest IPOs in Europe in that year. So why that is important? It's because effectively we had all the options on the table, right? So the size was right to do, to analyze all different options which we had. We issued primary capital only, so effectively we raised money to fund our growth, to fund our purpose to create a 100% green and secure energy ecosystem here in the Baltics. We did a 450 million euro IPO, which valued the company at 2.2 billion. In terms of investor split, you can see on the slide, we had 74% of long-only asset managers, 17% hedge funds, and 9% retail. Geography-wise, we also managed to tap in most of the pockets. We sold to US, UK investors, continental European, Baltic, and Nordic investors. And the final split, the reason why I'm on this panel, we did a dual listing. So we sold 2/3 of the shares in London and 1/3 in Nasdaq Vilnius. Moving on to the next slide, how it looks 3 years after the IPO. You can see, as Petras already mentioned, the liquidity has moved to a significant extent to the local market, right? So now we are 2/3 in Vilnius, 1/3 in London. And in terms of investor mix, we also have seen the shift from long-only international investors to retail investors. Yeah, and overall, what lessons did we learn throughout this dual listing process? So the first lesson, probably the most important one, is that if you are doing a sizable IPO, sizable, I probably agree with Petras on 200-300 million euros, and you want to do it in the Baltics, you need to do a dual listing. There's not enough depth in the market to do a single listing only. As much as we tried to do it, for example, in our bank advisor selection process, we asked 15 plus banks, which way should we go, right? And the answer across all the banks, all single one of them, local, regional, international, all of them said you need a dual listing, and the question is just where you do it. But so lesson number one, if you want to do a sizable IPO in the Baltics today, you need a dual listing. Second lesson is that in the secondary market, post the IPO, it raises you some challenges, right? Because of the split liquidity, it means that for some investors, the liquidity is too low and they either need to exit or they can't enter and those sorts of things. And you can clearly see in our split post-IPO, some of those long-only investors, they have moved out. And of course, we are happy that we have a bigger retail share now. We love our retail investors, but from the other angle, it's a bit disappointing that in the Baltic capital markets, we can't hold these large institutionals, which can bring much more capital in the future. So that's lesson number two. Number three, I think we touched a bit on the process. In our experience, when you take the whole scope of an IPO, doing a dual listing was fairly straightforward. So the extra effort needed, in most cases, it was simply doing the same stuff 2 times. So it wasn't that complicated. Extra cost, again, in the total scope of fees in the IPO process is also quite limited. So from that way, I wouldn't be scared of dual listings. And lesson number 4, that dual listing does not solve the frontier market challenge as well. So most of you are here are aware that Baltic countries are still classified as frontier markets. So the lowest capital market category, not even an emerging market or developed market, but frontier. And doing a dual listing does not solve this issue. So which means that you still are not applicable to be involved in most of the indexes, and passive funds effectively cannot invest in the share. So in short, in the primary, you need dual listing if you're doing a sizable IPO. In secondary trading, you have challenges because of split liquidity. It does not solve the frontier market challenge, but process-wise, it's quite a straightforward thing to do.
Thank you. No, I think it's fantastic to see that how retail investors' base has grown, and that actually proves the hypothesis that large state-owned enterprise listings help to develop equity culture. So it would also be the case in Latvia. So that's fantastic. And of course, other thing that you mentioned, this MSCI or any other index classification, with each large IPO, we move towards more favorable classification. So if we say that it takes a village to raise a child, it certainly takes a village to develop capital markets. So, fantastic. Thank you, Jonas. Yeah, and of course, me coming from exchanges, to me the next question is how to choose the listing venue. So you chose Nasdaq Vilnius, obviously, and Baltic market, and also you chose London. So why did you choose London?
Yeah, so in terms of Vilnius, we are obviously big fans of local capital markets, and there was no question about it. In terms of London, so we, in our short list, finally we had London, Stockholm, and Amsterdam. And so effectively it boiled down to several things. So one, we looked at what are the precedents, so what other companies from smaller countries do. So that's one thing. Another thing we did, we looked at what how many of our peers and which peers are listed on these markets, because local investors will be comparing us to them to some extent. Then we went directly to investors and asked their feedback. Where do they think it would make most sense for us to list? So we did that. And then we obviously looked at investor access and market depth in each individual case. And even though London for us, it won in the end, but Amsterdam and Stockholm could have been probably similar stories.
Yeah, well, you choose non-Euro, European Union country and also country with different currency.
So at that time, it was still European Union.
Okay.
Okay, so that's one thing, but Brexit was on the agenda and was one of the criteria not in favor of London. While in terms of, but we still decided that, for international investors, it's the most usual way. And it doesn't raise any questions, right? Because if you go to Amsterdam or Stockholm, there's a natural question, why did you do that, right? When we did it with London, no one asked a single time that question. It was, a standard approach. And in terms of a currency, so it also appears that it's not an issue in London to do euro-denominated issuances, which might have been a bigger issue in Stockholm, for example. So, now both Vilnius and London is in euros. We have the same share price, so it's quite, from that respect, it's easy.
Thank you. So, Indars, about choosing the listing venue.
Yeah, so obviously one situation is when there is an important market in that country, maybe even a home market, probably Tallink would be a good example. If it is really sizable company, then it's probably quite impossible to compete with valuations and investor base in the US, but then you need to meet a certain size threshold. And then naturally it would be looking at what sectors and industries are popular in that market, because that means that there are those investors that specialize in those sectors. And from our markets, I could mention like financials are strong in Finland, technology is strong in Nasdaq Stockholm, so is health sector in Stockholm and in Copenhagen, so those could be feasible criteria.
Thank you. Petras, what criteria from your perspective?
Yeah, I mean, I would say some of them have been already mentioned, but one would be where kind of similar companies are trading, so what we call comps or peer companies. So that's very important. The second is probably industry. So if it's like a tech or a biotech business, then the US is always a good home. So that would probably be the second thing, and then. I would say, yeah, probably Brexit has had an impact, and so Amsterdam has been gaining kind of prominence in the past couple of years, especially, and from kind of our conversations with issuers is kind of up for consideration as a listing venue, for many companies. But yeah, maybe I'll give one example. So the Baltic Classifieds Group, when it was kind of preparing for its IPO, decided not to do a local listing, went straight to London as a kind of premium listed company. So effectively, it reincorporated itself as a UK company. And one reason they did that was because kind of the key companies that investors were comparing them to were listed in the UK, and UK investors understood the industry very well. So that proved to be a great decision. I think they got a great valuation. It went super well, etc. But so yeah, that's I guess one example of how issuers actually kind of go through the thought process of choosing a listing venue.
But we have also a unicorn community here in Baltics. And it's quite frequently mentioned that they might be eyeing US markets. So what's your view?
Yeah, I mean, I think it makes sense. I mean, as far as like kind of fast-growing tech businesses, they're very well understood in the US. And I think just when you go to the US and you talk to investors, you get like, you get a pretty high level of appreciation to like, the future plans of the company, what they're trying to do, even though they might be, loss-making at the moment, etc. So I think there's kind of good receptivity in the US, of that. And I think, even the ARM IPO that took place, a couple of months ago, it's a British company, right? But it's a kind of a deep tech semiconductor company, chose to list in the US, it went really well. So in general, I think that's kind of a, a very valid, line of thought, I would say.
Okay. Anyone else? No? Okay. Let's move on then. Let's talk about transparency and reporting. And sort of, Armine, you already mentioned that there are different criteria, and maybe in Baltics, listing requirements and corporate governance requirements are more simpler than in other places. But how companies tackle those different disclosure requirements if they are dually listed?
Sure. Unfortunately, I'm listening to all the excitement on this side of our panel, and then there is me coming and saying, yes, but do not forget about this requirement and that requirement. Sorry. I have this role today, so I will continue in the same way. Yeah, transparency and reporting. I think I will start with the reporting requirements. The good news is that we do have one universal set of financial reporting standards, which currently our issuers can prepare and should prepare accounts in, be it Amsterdam, be it London, or be it US, actually, if we're speaking about foreign private issuers. So, yeah, financial reporting standards would be IFRS. Of course, it's normally quite extensive disclosure requirements, but in the Baltics, we already require our companies to do the same set of accounts. There may be some specifics that need to be remembered. So, disclosures are upped when we have listings. So, there is a lot of discussion about segment reporting, which needs to go in the financial statement. Stories about earnings per share and similar things. This might sound very technical, but I think segment reporting is one thing I want to definitely highlight, because segment reporting normally tends to be a very important part of prospectuses, especially if we want to highlight future potential and profitabilities of different business lines. So I think this is one of the areas where definitely the issuers may pay attention to. Another thing which, of course, becomes more and more important is the reporting in relation to environmental matters and corporate governance matters. So I will repeat regarding the CSRD requirements, which become relevant in Europe, just like IFRS being our financial reporting framework. So there is quite a lot of different challenges there. And one thing which I want to mention is that in my experience, and I had the pleasure and pain of working with 3 dual listings in my career, where one of the stock exchanges was the US. Coincidentally learned that we work with Petras on the same cases, basically. So what I want to say in that respect is that IPO readiness is a very important process to actually make sure that companies are ready from the transparency perspective, from the governance perspective, and from all the different perspectives. And of course, one may say, okay, I am here trying to sell my services, but the answer is that by doing this readiness process, which, by the way, current companies which are looking into listings, dual listings in the Baltics are undertaking, we are about to take one of such engagements as well. So it saves a lot of pain, it saves a lot of trouble, and it gets the companies ready. So either you do it internally or by involving some external advisor. We are looking into aspects like environmental fundamentals, are the companies ready, financial governance for sure. We're speaking about HR. There is definitely story about regulatory and legal compliance. So all the different dimensions which become very important in the listing process, they need to be analyzed and those gaps identified so that we have you know, a roadshow towards a successful IPO also from the readiness perspective. I do not want to say that companies' corporate governance or financial reporting needs to be absolutely perfect the moment we go to the stock exchange. No, it is an evolving process. It is an evolving process also when the company already becomes listed. But we need to realize that it's a completely different bar, and especially when foreign markets are involved.
Yes, I think you raised a very good point. And when opening conference, Karel was also saying that by listing, companies get access to capital and growth and unprecedented visibility, and return what is asked, only transparency. And why transparency? Because when company becomes public and listed, company management starts managing others' people's money. So it is very important to do it in a right way and be accountable. So, very good. So I think we are, yeah, Jonas?
Just maybe one comment on the transparency and reporting. I think that at least in our case, the local Nasdaq requirements are quite extensive and in line with all the other markets. So for us, this London listing, or actually our bonds are also listed in Luxembourg. I'm struggling to think of any additional requirement that we needed to meet. So effectively, if you meet the Nasdaq good governance guidance and those reporting standards, it's already okay for any or most of other markets. So the extra effort is limited.
So thank you. I'm taking it as a compliment that
Yeah,
we are
definitely.
at par with our partners.
Sure.
Fantastic. Okay, so it's not a problem for Ignitis Group. Okay, good. So, but let's speak a little bit about future. So obviously the businesses are growing. We have unicorns. We have also state-owned enterprises that are large and aiming at listing. So there will be need also for dual listings in the future. So what trends or innovations do you foresee associated with dual listings? So let's start with Petras.
Well, I would say that, eventually, and as I mentioned at the beginning, eventually I would hope to see kind of the Baltic capital markets being kind of vibrant enough and lively enough to be able to pull off these large listings, by themselves. Again, we're not there yet, but, hopefully as we get more institutional investors from abroad to invest into, Baltic companies, maybe more local institutional investors, more of a retail investment culture, we should be able to pull off these large IPOs just here on these local markets. Again, I don't know how long it's going to take, maybe more than a couple of years. But, again, hopefully we can do them here, and we will have investors like, BlackRock, Fidelity, and Capital, and all these guys, in investing here. In the meantime, obviously, just hoping for kind of more transactional activity, bringing more kind of state-owned companies to the market here, probably via dual listings, and just kind of, invigorating the local, kind of equity investment culture, both with, retail investors, individuals, as well as with, local institutions.
Yeah, I totally agree with you. And I think our first panel discussion was testimony to that, because for change, we had 3 prospective IPO cases there instead of array of different consultants. And those are only the cases where companies are ready to speak about it. There are many more that the future will bring. So thank you. And Indars, is there any sort of innovation possible in CSD space in the future?
Yeah, sometimes there is this discussion about blockchains and distributed ledger technologies that could be a breakthrough for the CSDs in the world. I'd say that buzz is a bit over. A couple of years ago, it was much more discussed, and there were more attempts to to play with new technology, very often just for the sake of using it. Nowadays, not anymore. So actually, companies want to have proper business case to test those new technologies. And in most occasions, there's no business case because you can do exactly the same thing with more conventional technology without having the risks that are associated with new technology. And maybe one of the big blows that happened less than a year ago was that one of the pioneers in that space with DLT technology application, the Australian Stock Exchange Group, that also includes the CSD, they wrote off a staggering $250 million that were invested in DLT technologies. So yeah, I'm not sure about these kind of developments. But in terms of dual listings, I agree that our capital markets will surely grow and will be deeper. Our pension funds accumulate more and more funds, so we already now see a trend that more foreign banks become direct participants in our markets, so all of that will help that our markets will be sufficient for many companies. But then again, we also hope that the companies will do brilliantly, will outgrow our economies and exchanges, and then hopefully Nasdaq in New York is the right place for them for dual listing.
Exactly. Let's hope for many positive problems in the future. So Jonas, what's your take?
Yeah, I mean, probably hard to say about the innovation on the dual listing.
What do you need to stay successful?
Well, I mean, I would agree with Petras. I hope if we do one more issuance, that we are hopefully able to do it just locally. So that would be great. And for that, what we need is more international investors here, them being properly set up to be able to trade here. We need that frontier market classification to go away, right? And it's a bit of a chicken and egg problem, right? So those two things, if we manage collectively to fix that, I think there's no need for dual listings. And
yeah, and I think we are progressing very well because my colleagues will not let me sort of deceive you, but I think 6 months ago we had no clues that MSCI is ready to reclassify Baltics as a regional market. So it is a fantastic achievement. Armine?
Yeah, so 3 things from my side. First of all, I hope that we will see a trend of many successes in the Baltic markets in terms of listings. I hope that those big or small dreams of listing in big markets like the US will come true. I also would like to know that the way I see the development of the capital markets, actually those foreign exchanges, they are really putting a lot of effort to make themselves more open and, issuer friendly. I'm speaking about UK Stock Exchange. I'm speaking about multiple contracts which actually US Stock Exchanges sign with other jurisdictions like Singapore or like South Africa. Lots of statements which, for instance, Hong Kong Stock Exchange is doing, and most recently big ambitions by United Arab Emirates and Saudi as the place to do dual listings as well. So yes, the world is open if we want to go there, and I wouldn't be an auditor if I didn't say at the end that I'm also hoping for significant developments in the reporting standards for our companies to actually ensure that this financial information and different type of information which we are disclosing to the potential investors actually also contributes in the building of both institutional and retail investor society in the Baltics and broader.
Thank you. And with this, we conclude our panel. And I believe we deserve a round of applause.